Hi, Tim Bigham for Delta Derivatives, taking a look at a market that is losing a little bit of power here as we cross 23,000 for the first time ever on the Dow. We'll see what that bodes well. We see the VIX actually up on the day with the market really flatlining. This has been one of the most comatose, tightest trading range markets I've actually seen in my trading career, and that stretches back to the mid-80s. So certainly things getting very quiet, which from my trader kind of gut tells me it might be time for that long, elusive pullback maybe. Certainly the VIX popping up today, reminiscent of 2007 where the market made new highs, but the VIX followed it up higher. We shall see. Speaking of following along with some big time order flow in Ferrari, RACE, where someone came in over the past couple days, bought about 10,000 of the at the money 115 calls that expire this Friday. Implied vol went from 21 to 34 because of that big buyer. So I'm jumping in, selling those, hedging by selling the 118 put. So doing what's called a guts trade, just looking for Ferrari, which last I saw was about 116, to remain between 115 and 118. More importantly, selling that inflated vol, selling about a 32 vol in total, looking for it to come back into around 26, take that trade off. Got about 1 point of edge here on that. So being able to sell that guts trade for 540, theoretically with a 26 vol, which is above that 22 vol, it's worth about 440. Also taking a look at Caterpillar, which finally is showing some weakness here. This stock is the most overbought I've really ever seen it on a 14-day RSI basis. We've got earnings coming down the road in the next week or so, but I'm just looking to buy some short-term puts that expire this Friday. Just looking for CAT to have a pullback along the way here. It's tied very much to oil and gold, obviously making mining and oil equipment. Both of those are starting to show some weakness as well. So I think the CAT got definitely a little bit too out of the bag here going forward. Otherwise, I kind of like put diagonal spreads as kind of a trade structure here. It's a way to kind of position slightly bearishly, buying longer term kind of at the money puts, selling shorter term out of the money puts here, taking a guardedly bearish stance. And as Tom Petty, who is one of my favorites, said, the waiting is the hardest part. This allows you to at least collect some short-term premium while waiting for maybe just a pullback. All it will take is 1% or so to get that trade structure moving again. Big time gamma with low levels of implied volatility. Also, we just see pervasive volatility selling across the board. I think you're seeing some covering on that as maybe everyone's getting a little bit nervous that a short-term top might be in place. We shall see. So until next time, as always, here's to good trading. Take care.